Hey, everybody. Thanks for joining us here. I am Howard Greenberg, the crypto educator at Prosper Trading Academy, here with the legend, Charlie Moon. Going to talk a little bit today about crypto mining companies and segue into some semiconductors. Charlie, how you doing today, man?
We're doing good, man. Don't forget about our crappy sports teams.
Oh, yeah, we're going to talk a little bit about that. Yeah. That's
doing
easy
great, brother. I'm doing
to
great. Thank you. Thank you for asking.
Awesome, man. Hey, I was looking and talking to you the last couple of days. There's been a lot of talk about the Bitcoin mining companies out there, the publicly held ones, and some of the troubles they're about to hit. You got any, insight on that or any opinions?
Yeah, first and foremost, always listen to Howard Greenberg when he says short something, because we're just talking about Howard was saying short Mara, it's down 40% since your call, since literally the second of your call. And the negative news on Mara today says Montana crypto miners offline after storm. They can't get their mining operations going, and that's a problem when a company that is the only way of generating real revenue or consistent revenue for them is not online and working. We could only imagine what the pseudo costs are going to be, both in lost wages and, whether they need to repair or whatever they need to do to bring it online. It's certainly a negative. And we kind of felt the ripples throughout the sector itself. A lot of the names which have been pumping recently are starting to pull back. This is something more in the realm of, it's always been a penny stock that I've always traded. It obviously exploded during the Bitcoin boom, and now it's kind of back to where it started. The question here, Howard, is do you still believe in these mining companies as an investment, just like you would with crypto? For me, the quick answer is yes, because it's married directly to crypto. But I know that there's some outliers, some that will outperform others. Is there any of these names that you happen to like? I know you're kind of pivoting this towards the stocks, but I'm not too familiar with Marathon Digital and Riot as much as you are, because of, again, I play them as momentum names. So which would you rather have? Would you rather have STIG, MARA, Riot, or somewhere else, or if you would even invest in the sector?
So a couple of things. Yeah, I do think you nailed it. I think what's going to happen is going to be some real winners that come out of this, because, the one thing that you said, you hit it on the head, is 100% of their revenue, it's Bitcoin, and it's from Bitcoin mining. And Arcane, I shared that with you, the Arcane report, which sort of got me on that negative Mara streak. And then something that you always talk about, people who are ready to buy that distressed assets. If they've got some money, Marathon, what we do know is Mara has historically been slow at getting hash rate on. They've always overestimated when they're going to do that on their quarterly reports. So the idea or the thought is that they might be overextended. Maybe someone like Argo that's in a real good cash position, could step in and buy some of those machines at pennies on the dollar.
Right.
And whoever, it's a war of hash rate.
Yeah, and you're right about that. I've noticed that there's a lot of app miners available at much lower cost than they were just 6 months ago, when you and I were always looking into the mining thing.
Yeah. Good thing we didn't buy it. They're down. Machines are down 50%. Never mind the price of Bitcoin. Yeah, and that's the other thing. Just to point out is that the other problem is that a lot of times they're using their Bitcoin holdings as collateral to mining companies, or they're using the collateral in their machines. And the machines value have gone down about 50%.
Right.
And then I would go another way to kind of move a different angle. How do you think that's going to affect, the lack of new machines that are going to get ordered? We know that a huge amount of the chip shortage was being blamed on the mining companies, if I remember correctly. That's your side. To me, I look at the give them to me. You're watching how it does to the rest of the market.
See, for me, one of the fun facts is something that you just brought up, that these companies that are pure miners of crypto, especially Bitcoin, rehash and resell their equipment so they could use that money to upgrade to the newer equipment to be more efficient, right? Because technology is always evolving. At this day and age, technology revolves faster than ever. And so they actually need to sell the old miners, which there's a lot of retail people that'll be more than happy to buy them. So they could utilize that capital and, reinfuse it to new products, new upgrades to, hopefully help their margins and make more money. One of the things that stands out to me now, I didn't think about it back then, but it just seems a much smarter move now between Riot and Mara, is that when, we're looking at the peak valuations, when we're looking at that $30 to $60 range for these companies, Riot made offerings and then they listed in an SEC filing that they could promote and bring up offerings to the market at any given time. And I believe Mara has had offerings as well, but they didn't have it as frequent as Riot. And this is, for those that don't know, a great way for a company to sell some of its actual assets, like the company themselves, right? Investable shares, and raise capital literally instantly if they do at market offerings. So if the stock is $40, they release 1 million shares in the market, the stock may tank, but they're basically making somewhere between $36 to $40 million cash on hand here. And they've taken that route, and I think they now are a little bit more cash flush, or at least have some cash available to be able to withstand, to be able to upgrade, to be able to handle the creditors and et cetera. And maybe they may be the ones to come out from this a little bit more shinier than Mara would. Respectfully, when we were watching the two stock performances during bullish markets, Mara was outpacing Riot, but I think that could be a changing of the guard. And this has a pretty tremendous effect. Now, it may not be shown as of yet because a lot of the pre-orders are still coming in. There's still miners out there. There's still people that are willing to invest in this industry. But the question is, what is the residual effect longer term if the winter in crypto lasts a lot longer? Do we see that waning demand on semiconductors? Last quarter, Micron had insane, and I mean insane, blowout guidance, especially in the face of shortages, material issues, and production issues. They said, even with all that, we're counting all that, we're going to still kick Wall Street's, in terms of expectations. Stock dropped around 22% the following 2 days. Makes no sense.
Right.
Because historically, when a company guides higher, that's usually a big boost, right? Because the stock price is the future valuation of a company, not the current valuation. So, I could see this being a struggle. Now, there's going to be standouts as well. The same people that provide these processors are starting to offset some of their business. Some of these companies that do provide the GPUs are starting to offset that knockdown in business because they've pivoted, or they're starting to see expansion of what's known as deep tech, right? Deep tech is AI progression, AI technology, data dissemination, et cetera. NVIDIA has pivoted towards that and is fairly dominant, but AMD and Intel are right on their tail, and they're really, really breathing down their necks. So I haven't seen, right, there may be the balance in the scales may have started to even out. But if we're starting to see the actual crypto demand truly die out, we know that winter is it's only going to signal that winter is probably going to be longer than expected. But that could have a devastating effect on the semiconductor sector. The biggest explanation is because of what we would say an aggressive usage of Antminers. I mean, they're pushed to their limits when they're working, right? They're processing a lot of data. They're working pretty much on peak from the time they're turned on till they're resold. And after that, they're still working extremely hard. So that puts a lot of wear and tear on components, where components, we say we don't, they don't build them like they used to. Components were pretty much affable for 7 to 10 years before you eventually have to upgrade. Now it seems like every 2 to 3 years, we're going to have to upgrade because everything else is progressing so fast. So, that is a strong positive for the semiconductor sector. But if, like you had stated, the crypto world being such a major clientele base for these GPU and processor makers, the overall component makers, if that demand, let's say, shaves off by like 30%, that's going to be a huge effect quarter over quarter. That's going to be something dynamically to watch, because this is partly why I truly believe that they're the ones bringing tech down. I mean, you and I talked about it a lot. You were a bit actually surprised, and I'm truly flabbergasted at how cheap NVIDIA and AMD are in comparison. And Apple, Microsoft, they're off their highs. They may new 52-week lows, but they're holding up steady. NVIDIA is getting washed out. I think NVIDIA now, if I pull this up very quickly, and I don't mean to take so much time, they're more than 50% off of their 52-week highs, Howard. NVIDIA.
Yeah. I mean, it's down like a crypto.
Right.
It really is.
And that's one of the accelerators here. And people are wondering, is it China? Is it China? Partly China's actions, right? China banning, we're going to throw any of these miners out, these crypto miners in China. You're caught in China, you're basically going to go to prison. Right. I know the consequences are pretty severe. The government doesn't, the Chinese government doesn't like when you mess with their money. So we've already seen somewhat of a depressive state. But from my understanding, Howard, a lot of them just moved right over the other side, either into Taiwan. No, Vietnam is another one I heard that Vietnam's starting to come up. India is starting to absorb a lot of that. So, once we see that slowdown from where all those miners went to, then what? Then what's left? Is it priced in? I'm going to say that a lot of the crypto downturn in terms of demand is priced into the semis. But if we see weakening sales continue, we are going to see a lot more depression in the semis. But for the long run, you and I both know that only makes them much more and more attractive as an investor. I guess the question is, Howard, do you think the state of mining, right, in correlation with the semiconductor, do you think that the state of mining will get back anywhere near the glory days of 6 months ago when it seemed like everybody and their mom wanted to mine, right? Do you think we'll ever get back to that level anytime soon? The big question is, do you see that interest? I still have my HNT miner, by the way.
Yeah, no, I'm still doing my mining, still there. But no, you're not going to see it return. A couple of things, you're not going to be mining Ethereum anymore. So you just took one of the major two use cases for miners, especially the GPU units, off of the market. They're not going to be even used anymore. And then, like you said, is what happens is that the machines, people aren't going to have the money to spend. You're going to have, what you're going to see is a slowdown. I noticed that Anti-Miner, they came out with newer models during the bull market. They upgrade, it's amazing how they can improve the quality just a little bit and come out with a new model during the bull markets because they want to sell more.
Right.
I don't think you can see, you're not going to see those orders. Going back to it, Mara has $260 million worth of machines on order. They're taking their hash rate from, a little over 3 exahash to up over 20 exahash. So you're talking about some huge, amount of increases that they're looking at here coming online already. So those have already been in the pipeline though. Right. So those wouldn't be future. So that's the other part, is how many future orders would we see with everybody just super loading up?
Oh, the flip, there's two flip sides, right? Either people loading up or people canceling those large orders. And that's the question. The money drying up in crypto is what's crazy. And I think a lot of this has been more recently. I don't know, would you consider the money drying up? And it's like that for equities as well.
But VC's money not drying up at all. So that's still there. So that's right. So that's it. And there are people who missed out. So I think there are folks and non-native crypto blockchain or crypto mining companies that wanted to buy, like you said, back 6 months ago, a year ago, and couldn't get into the business, that could now look at it and say, hey, this is reasonable. Another angle to really take a look at is we know that the gas and energy companies that have been looking for new sources of revenue, as we are trying to downsize our energy, climate, carbon footprint, have already been looking at using Bitcoin mining as one of those solutions because, again, they have energy plants. They can go
You're
behind
right.
the meter.
CVX and XOM.
Right. So some of them have already started doing that. So maybe we just see a transition into who the business is, Charlie, and keep an eye on, who has plenty of money right now that could buy these distressed assets. Energy companies, right?
Yeah. They're
loading up right now. So I would not that, I just thought of that just literally as you brought it up, and that connection. But quite honestly, that's something to really keep an eye on is the energy plays, because I know that they were hugely at the Bitcoin conference and at Consensus trying to make connections into the world of mining. Like you said, Exxon's been one of the big ones that's been very vocal about it. They're looking at using that flared gas from their, oil and gas production, but then also the fact that, again, they have access to energy infrastructure and the things that really Bitcoin mining needs. Lots of, real estate, right? A lot of these guys got huge real estate holdings in the middle of the West, that,
you bring up a funny point in that, because it's just like any corporation. What would they do with one of their top clients? Well, they would wine them and dine them. And you kind of marry the two, right? What's the energy consumption from miners? Well, it's tremendously high. So, it's like
they feed off each other. Yeah.
Yeah. The exchanges do the same with the institutions. What would they be without, for example, Citadel or JP Morgan's order flow, et cetera? Well, of course they take care of their top clients. That's just always going to be the case. The reason why I asked about that originally really kind of breaks down to the 3AC liquidation aspect, right? I mean, they're over and done with, and this is what a tremendous fall from grace, and there's still fallout. Like, we hear it. You send me this articles, I send it to you as well. We're like, it's funny, but I hate to say it like this, but it's the same thing with equities right now for me. But since I'm kind of, in both, it's like I'm always looking over my shoulder or always wondering about what alert I'm going to get here. And I kind of hate it. Like I've really shied away from my phone these days. It's not that like I'm getting destroyed. I'm not, I've full disclosure on my long-term accounts. I've basically gone to cash. I've been, kind of in that stance where I want to have, powder in the keg just in case it is time, and it's starting to really get to that time. But we're still dealing with FUD. FUD is obviously a crypto saying, so to speak, but it's really, really ever present in equities. Like, it seems like on a daily basis, investors have already kind of tied up a lot of their money, and they're just kind of weeping every day looking at the markets. And then we just have this hyper aggressive short-term traders just launching and full porting into like options trades, or playing this ping pong game back and forth. And again, I'm not hating on it. That's my trading style overall. But now we're kind of seeing where's the big money really going to come in? How aggressive is big money going to take? And we had this discussion. I really think Wall Street is like drooling at the opportunity of getting heavily involved in every form or fashion. And like you said, VC money is there, but I think there's VC money ready to come in, like very extreme, especially those that are, that are funneling a ton of money into deep tech that just isn't really getting anywhere. They're like, well, if I'm going to burn $100 million, why not do it in something that I know can, have an opportunity of making me, way, way more at a higher probability. They say in Silicon Valley that VCs, it's like one of every 100 investments that they funnel millions of dollars into. I mean, it makes up for all losses and then like 100x. And that's why VCs just throw money. They really don't care. They just like,
Right.
they like you as an individual. They'll cut you 10 million. They'll cut you 20 million. They just don't care. And they'll be like, all
Like
right.
you said, I think Solana was 3 cents they paid. Those early investors, the VC, 3 cents. That thing was trading well over $100. That, right there, that's it. That's why, Mike Novogratz got that tattoo of Luna that he definitely regrets on his arm right now.
That's right.
But again, he bought, for under 10 cents, and that thing was over $100. So, and they get in hundreds of thousands of them. Unfortunately, the vesting schedule, they were only able to make probably $1 billion on that deal. Yeah. But yeah, no, absolutely. Yeah. So, so the question is NVIDIA, AMD, Micron, Intel, I actually am kind of interested in what Intel sort of got going on personally.
I love Intel.
Sort of reinventing themselves, right, a little bit.
Well, the big thing, Howard, is that they're reinventing themselves to be a foundry, and that's important. And for people that don't know what a foundry is, basically, they're going to be a major provider of applicable production for a lot of different companies, especially those that are more than willing to keep it in-house versus take it overseas. And this foundry that Intel wants to build out, they're promising competitive prices to China. And so there's certain companies, AMAT, Applied Materials, LRCX, KLAC, that stand to benefit greatly from this initiative. And it sounds funny, but I'm almost positive that Intel is not going to try and replicate and create their own machinery. And if they're going to grow to the scale that they want to get to, a company like ASML is going to stand to benefit just from Intel's business alone. So that's something to keep an eye on. We look at AMD and NVIDIA kind of as US-based companies, but really their centralized focus is more out of China, and the base of China is not about business, but it's because that's where they have their bread and butter, which is their production. And that's where they're going to save a lot of money. So I would say I love the bounce back idea in AMD and NVIDIA. They're very, very, very important figures in the GPU industry, but Intel is where I could see a big growth potential, even with their share float size, to a scale where it probably hits record levels, quite honestly, if this foundry business is going to be good. So I love them long term. You know who I hate long term is TXN. I don't really understand the love for TXN, but
yeah, especially with everything going on right now, man. You know my feeling. I've been very anti-Chinese stocks for a while. I was ever since I got burned on Luckin Coffee, whatever that was. Ever since that dog. But I worry about that.
Well, I don't trust Chinese stocks. I mean, until they get audited by the United States, there's nothing to trust. Luckin proves that you shouldn't trust them.
Sure. What about Qualcomm? I saw some news the other day that they're going to benefit, it looks like, from Apple's misfortunes.
So apparently Apple, which has been trying to develop their own 5G chip, has failed. And so that allows Qualcomm at least 2 to 4 years more of business, from a client like Apple, whose number one product is and happens to be a cell phone, which, of course, Qualcomm is the most dominant figure in terms of creating those components. Obviously, Samsung is one of their bigger, if not their biggest. We know that Huawei has tried to steal their technology. Qualcomm, Huawei was actually successful in stealing their technology, and Qualcomm is still dealing with them. But in the same sense, Qualcomm has openly started to share their information with China because they need China. That's one of the things with China, right? Is like, if you want to bring your tech into our country, that only happens if you share your IP. And like even Elon gave into this, right? So
Well, it's either willingly or unwillingly, right?
Yeah, I mean,
You share it
listen,
one way or another. They're going to steal it otherwise.
Yeah, because it's like you have the rest of the world, and then you have China, which basically spends as much as the rest of the world. So,
Right.
This is important because Apple's done the same. Now, there's some IP that they don't share, but again, China's not known for being innovative, but they're the best at reverse engineering, meaning figuring out your technology and replicating it and doing one little thing on their patent, right? Where it's like A should equal to B, but instead it may just divert straight to C. And that's how they skirt around all these patent laws. And, it's really funny to say it like that, but, these American companies are like, well, it's better to get some than none. And surely they could be our competitors, but our name, our brand power is going to be just as important. And so when we pivot back to Qualcomm, because of this and the scenario that they're facing, this stands to be a big booster for Qualcomm in the long run because they're able to retain Apple as their client. And the number one product, which makes up of like 50% or 48% of all of Apple's valuation, is their cell phone. They're this ridiculous every year $1,500 piece of
that I willingly give for some reason.
Yeah, so it's a big positive for them, but again, I'm never going to put it past a company like Apple to develop their chips on their own. Look at their M1 processor and just how powerful it is. It's quite shocking. It actually is a real threat to a company like Intel and AMD. It shockingly is. It's probably one of, if not the most impressive and powerful processor out there, but it's not cheap. They can't produce it on a scale to a level of profitability unless they're selling everything at such a high important price. And that's why they'll never produce and offer to anybody else, but remain and keep it in-house. But it's also why you pay $2,500 for a basic MacBook. You'll pay $1,100 for a tablet, right? Powerful tablet, but a tablet. And we're going to be paying anywhere from $800 to, $1,400 for our cell phones. This is an interesting thing with the semiconductor sector because everybody loves semis over the last 2 years. And just in the last 6 months, we've probably just retraced back and given it back, given all of it back. So, they say it's kind of the balancing of the power here. I don't know if that's going to be the case going forward, but I do love them as rebound plays. Now, I want to talk to you about, and this is just a small pivot kind of being thrown out of, or kind of going back to what I was talking about earlier with 3AC. There's been issues with crypto exchanges. There's been a few crypto exchanges that have halted withdrawal, which again sets up fear. And then there's been some that just haven't been able to settle it yet, right? So one of them right now is CoinFlex. There's been an issue with CoinFlex, and a gentleman named Bitcoin Jesus, who I'm not familiar with. I guess he's an early adopter. You're probably more familiar with him.
Sure. So CoinFlex, in an interesting sort of thing, had stopped their withdrawals, had said that they couldn't, honor withdrawals recently. And they originally just said it was because of a individual that was over leveraged that owed them $47 million.
So it's literally because they're saying it's one person.
Oh, yeah. They said it was one high net worth individual. They then came out, the CEO, and basically just went right after Roger Ver. Roger Ver is sort of the founder of Bitcoin Cash, the fork of Bitcoin. He calls himself Bitcoin Jesus. I said this to the crypto room today. It's amazing to see. They're almost picking off all the villains one by one. If you go through and look at the people that have sort of alienated the most people in the crypto world, Do Kwon would definitely have been up there.
Hell yeah.
Shuzu would have been up there from Three Arrows as being very, annoying, so to speak, and these guys. And now, you have this guy, and, he's had alienated a lot of people over the years. He'll say that Bitcoin Cash is the true vision of Satoshi, and that, He sued, and
Ah,
he's the one that sued to get the name Bitcoin and all that stuff. So
right,
not well
right.
liked, but yeah. So they called him out. The CEO of CoinFlex called him out, said he owes $47 million over long, needs to pay off his margin. And yeah, but we're definitely seeing that, a lot of people were over leveraged. It doesn't take, and it just takes that one that, again, this is supposed to be all fully collateralized leverage.
Right.
And what we're finding out is DeFi was not so decentralized. And where the fall down was, in other words, you didn't see anything fail within a protocol like Aave, within a protocol like Compound, that a
Right.
true decentralized finance, smart contracts control the entire protocol. What you saw was where you had centralized entities that could make decisions. They made poor decisions, whether that was Alex Mashinsky and the folks at Celsius, putting their money into very speculative things like Anchor Protocol and, staked ETH on Lido, or whether it was Three Arrows Capital, with just triple leveraging everything to the hilt all over the place, borrowing from Jane to pay John. It just heavily leveraged, and true DeFi held up, but centralized DeFi is what failed us.
Yeah. So, let's talk about this really quick because, one of the things that I hear a lot about and I guess the general outside complains about is where was like the risk tolerance and risk management and all this. But and again, I'm not suggesting that it wasn't, it was very poor, but let's also call a spade a spade. This is no different from what Wall Street did. Let's not forget Bear Stearns, Lehman Brothers, Morgan Stanley. They were leveraged to the hilt in extremely bad and risky products. And their risk management team actually knew about all this. And at some point in time, the pain got so deep, like the cut got so deep, they finally had to say something because it was literally on the verge of total collapse.
Right.
And I guess it's just human nature to just wait until that finalized second because we see it on Wall Street, right? It's supposed to be one of the strongest financial facilities, sectors, et cetera, that people could look towards. And we hear all this like, this is why you shouldn't invest in crypto. But it's the same thing. Clowns are clowns. It doesn't matter whether they wear a t-shirt and jeans or they wear a three-piece $4,000 suit. These a-holes, and part of my language, I know that our compliance team may not like me saying that, but truth be told, it's these people that make extremely poor decisions that don't have people to say anything to them, or they blatantly ignore, that affects millions of people's lives. And we're hearing about the fallout in crypto. You obviously point out very high quality projects versus the riskier ones. There's always a lot of chatter, right? There's always backroom chatter about stocks. We hear it in Discord groups. Crypto is a little bit weird because they don't really have a centralized area. Everything is internet based. So there's always going to be hangouts, right? There's always going to be Twitter spaces. There's going to be Twitter chains. There's going to be Discord groups and server chats and 4chan and all that. And all that is frowned upon, but there's nothing different, right? There's nothing different than going to one of those bars on Wall Street where someone from Morgan Stanley, someone from Goldman Sachs, someone from, Barclays and Deutsche Bank, they'll all meet up and then they all talk, they all share information, and then they all go out the following day and make $1 million on that information. And again, do they care about your net worth? Do they care about our future? Do they care about the economy? They don't. The name of the game of what you do and what I do and why people really want to be involved, it's not really to make a change. There may be a handful of people to make a change, but obviously people are looking to profit from this in some form or fashion, but they want it to be fair. They don't want these issues. And that's the problem. We're now dealing with this point where your market, my market is muddled with so much like BS, and there's so many external factors that are causing, and yeah, I guess that's normal market conditions, but are they ever this extreme consistently? I feel like when crypto went down last time, I didn't believe it was perpetrated. I just believed that liquidity dried up and there was extreme fear. Nobody wanted to touch it on the dip because it went from, if I recall, it went from 2,000 to 10,000 pretty quickly. And then it went from like 10,000 to 20,000 like that, like a day or two. And then after it hit that 20,000 mark or thereabouts, depending on which exchange, it dropped, tried to rally, and then it dropped more. And the drops were way sharper than the bounces, and then it slowly melted down, and then it started staying in that 4 to 5,000 range.
Yeah.
And then it started to wake up, and then everybody's like, remember when this mug went into 20,000? All of a sudden, next thing you know, we're at 69,000.
Right.
And the only way I could describe it is if you looked at equities, everybody was panicking. People were talking about the world was coming to an end because of COVID. And then the market started to bounce and then started to hold. And then people started making a little bit more money. And then everybody's like, this is looking good. And then boom, we whatever we lost, we basically capitalized a 4x return on that.
Sure.
And I mean, we made the biggest move from that COVID low to the November highs, or in the SPY, January highs, and that was bigger than basically the 4 years combined, 5 years combined before that. It was, in terms of percentage gains, it was outrageous. And now we're rolling back because of these exasperated run-ups, because everybody's trying to make money, and everybody's going to start talking, everybody's going to start panicking. And for me, my attitude in this situation is I cannot wait. If it's going to be 10 years, I don't care. I'll be patient. If it's going to be 5 years, even better. But I'm not looking at this with fear. If you're looking at this with fear, that's because you may be holding still. And if you're hodling from 50, if you're hodling from 40, hey, this is something that you have to understand. Risk management is a thing, guys and gals. Sometimes you just have to understand when to cut your losses, because you could lose 10%, 20% of your portfolio to the downside. But if you're making 300 times on the way up, what is that 10% really going to matter in the long run? It's not. But if you're down 80% on your portfolio and then we get that bounce, well, you're not capturing a tremendous amount of the move overall unless we overshoot where we're buying at the peak values, right? And unless we do that, you're really not going to see the type of return in corporation with the stress that you had to face here. So, Howard, I want to know specifically what your attitude is right now that winter is here and we're kind of on these lows, and everybody in their world, in their moms, are talking negative or dropping negative stories. What is your approach and attitude right now?
I mean, it's sort of in a wait and see, I made some downside bet on Bitcoin, yesterday. That's paid off pretty nicely so far. But in general, you got to look at smaller returns right now, hitting those. If you're buying the dip and looking for the bounce, those bounces don't come back as high as the previous, like you said. So be ready to take smaller profits and protect yourself once you go up. But the market's going to bounce back. Nothing changed. Technology isn't going away.
Right.
Disruption isn't going away. What I've noticed too is that's been interesting is when you look at sort of the on-chain metrics in Bitcoin and all that, they look at things like holders that have been in the market over a year versus ones under the year, based on addresses and when the coins last moved. And what you see is people that actually have held for the last year, they're probably not going to sell at this point, because what it is they live through the up and down. They lived through the up and down. Yeah. So they're looking at it a little different. They might hopefully have some powder on the sidelines to buy some more now to cost average it down. But we've seen the worst of that selling. It's only going to get better. And it's the miners are going to be a problem for the short term to watch, because they've got a lot of We know that Bitfarms sold 3,000 Bitcoin, but that was only half of their holdings. So, they've got a lot. I do think Mara has held every Bitcoin they've ever mined to this point. They are very much in a cash poor position once they start paying for their machines. So they're going to have to sell Bitcoin. So we're going to see that come. So we've got some external factors out there. I think the miners are the ones that are really going to be the next in the final capitulation. Once we see that, we'll be good to go. How about yourself? What are you seeing in the markets? Where are we on our fade or
next up? So with equities, for me, I'm not, I'm looking at this like a pool of ice, right? Just freezing cold water. And so I'm not ready to just jump full in right now. I am dipping my toes, though. I do believe that we should start looking at accumulation. I am also prepared that the markets could go down 20% lower. I got to be fully transparent. I haven't come back into crypto outside of like a 1 or 2 day trade after the 40 broke. That I've shown you a lot of my trades before, but I've been very quick in and out. I haven't touched it much. I certainly haven't kept too much money out there, but that doesn't mean I don't want to. I'm actually planning on putting a pretty, and I'll discuss this with you when I see you next week, pretty fat chunk of my savings into crypto at some point. The question is, when do I start going? Like, I feel like this is a good period for the start of the accumulation. And this is kind of where the attitude is very different, because there's people right now that are stressed beyond their mind because they're in from BTC from like say 40 to 60,000 and they have held through this. Now, obviously being long at 40 is a lot more positive than holding from 60s. I'm not saying that there's a lot of people holding from 60s, but I'm pretty damn sure there's people out there holding. And their belief is that they're going to bounce back, and I'm sure it will at some point. But it's just a lot easier for us to go from 20 to 40 than it is from 20 to 60 at this point. Absolutely. And that's kind of my thinking with equities. I don't know if we'll get to peak 2022. Maybe peak was at the beginning of 2023 with equities, but stocks that are down, that got a 70% haircut, names like Meta, for example, AMD and Nvidia, even if I could get 40% bounce back because of the acceleration, the price points for these equities, that's a tremendous return in a short period of time. So I'm looking to slowly accumulate. I'm actually going to be more concentrated instead of trying to be diversified. All I'm doing with diversification is whittling down risk, but really just shaving off a tremendous opportunity for profits. I'd rather be a little bit more leveraged and concentrated, probably between 4 to 6 versus 20 to 30. And that's my approach with crypto as well. I'm focusing on BTC predominantly. I'm definitely going to have some ETH. I'm going to dabble into a few alts, rock solid projects. That's why I ask you a lot about these projects. But, when I ask my friends that are involved in crypto, they're always like, well, there could be more downside. And because of my lack of knowledge, and that's really all on me, it's all data information is available, but it's just my lack of knowledge and experience. It makes me more hesitant with crypto, which is why I rely on you guys, the guys that I do know and are very smart and obviously have had success. But when it comes to equities, I'm very confident, and that's really the attitude in my approach. I'm not going to go full bore at any one given time. I plan on building out. I definitely plan on seeing my portfolio possibly deep in the red, but I'm also knowing that I'm doing it after the market's had a tremendous haircut, after we've already started pricing in a lot of this drama that's suppressing this market down right now, inflation, war and everything. And I'm not sitting here trying to pick a bottom, because I'm not looking at this like a short-term trade. I'm really approaching this like as a trader, as an investor. And that's really kind of wanted to leave this off, that the folks that are listening to this podcast, make sure you disseminate the difference between the two. Long term, Howard is a believer in the sector. I am a believer in crypto as well. I believe that the rewards are going to be tremendous. If you are a believer, it's one of those things where you are rewarded, right, for being involved and being a player. History has stated itself. In the history of price performance, this shouldn't be a surprise to any veteran. You know, the veteran has lived through this multiple times. It's the surprise for those that are new. It's the surprise for those that are stuck at the highs. And, you know, whether it's crypto or equities, we are going to bounce back. I just don't know if we're going to get to peak anytime soon. This is a great time, in my opinion, to start dipping that toe in the water. And then eventually our toe's going to get so numb, our leg's going to get so numb. To jump right in, brother, and then we'll be good.
You heard it right here from the legend, Charlie Moon. It's time to start putting that toe in the water. That's the words I've been waiting to hear, Charlie. Hey, everybody, thank you for joining us this week on Dips to Rips. If you like this podcast, Charlie and my content, please share this with your friends. Hit like, subscribe, all of those good things. It really does help us out. We do appreciate it. Again, for Charlie Moon, the disciple of trend, and myself, Hondo, thanks for joining us. Have a great week.
See you, everyone.
This has been Dips to Rips with Howard Greenberg and Charlie Moon, brought to you by Prosper Trading Academy. Visit us at prospertrading.com to find out more. This podcast should not be considered professional, financial, and/or investment advice. By accessing this podcast, you acknowledge that Prosper Trading Academy LLC, PTA, makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information and opinions presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. PTA does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the PTA. PTA assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials of the third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein. Moreover, PTA makes no warranty that this podcast or server that it makes it available is free of viruses, worms, or other elements of codes that manifest contaminating or destructive properties. PTA expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, reliance on, or inability to use this podcast or the information presented in this podcast.